Hey, thank you for visiting GuruFocus. My name is Charlie Tian. I'm the founder and CEO of GuruFocus. In this video, I want to introduce the Shiller Pe feature from GuruFocus.com. Shiller Pe ratio was invented by Professor Robert Shiller of Yale University, and he invented this Shiller Pe. It's also called a cycle-adjusted PE ratio. So it gives you a more complete picture of where the valuation is instead of the regular PE. To try to overcome some problems, the regular PE, which sometimes give you a false indication of the market valuation. For example, let me share my screen with you. Okay, the Shiller Pe is actually under the market manual, and it's number six sub-manual here, Shiller Pe, and also we have a sector Shiller Pe here. And now we come to the Shiller Pe page. It says Shiller Pe is a better measurement of market valuation. So why it's a better measurement? For example, during the financial crisis of 2008, we know that the market crashed. Market S&P 500 was down more than 50%. But if we look at the PE ratio, the regular PE ratio, the PE ratio was extremely high. When PE ratio is high, you would think that market was expensive. But actually, no, the market dropped more than 50%. The PE ratio was high because the earning was low. And during the recession, financial crisis recession, and the lost companies made less money. So although the S&P 500 was down 50%, but the earning was down even more. And that's why it brings the PE ratio up to 120, more than 120. Seems expensive, but not at all. That's why Professor Shiller, he invented this Shiller Pe ratio. And as shown in this curve, you can see that the Shiller Pe ratio will tell you that during the 2009, the market crash. During the crash, the market was extremely cheap. And which is true because after the crash, the market quickly recovered. And as of today, the Shiller Pe stands at 32.4, which is 25% higher than the recent 20-year average of 25.9. So today is high. The Shiller Pe is high. Although the regular P give you a cheaper ratio, give you a 21.7. And it seems to be lower than the 20-year average. But Shiller Pe says that the market valuation is higher than the 20-year average. And I would think that Shiller Pe give you a better, more accurate picture. So from the Shiller Pe ratio, similar to the Buffett indicator, we can estimate the future market returns, assuming that in 8 years, the market will go back to its original Shiller Pe, the median Shiller Pe, in revert to the mean. But we need to consider other factors. Other factors is the future growth of business, the dividend yield of the stock market, and then plus a factor of the Shiller Pe will revert to the mean. These three factors can be used to estimate future returns. And that's what we get from the Shiller Pe estimate. The green line here, if I just click off the other lines, the green line here is a predicted future market return in history. And now if we look at the actual return, the actual return before 2008, 2009, actually, the two curve works pretty well. But after 2009, 8 years on, the market was distorted so much because the Fed was changing interest rate, adjusting interest rate, lowering interest rate, and also printing lots of money. But overall trend is the same. The future return has been going lower. And as of market peak of 2021, starting that point, Shiller Pe tells you that future market return will be almost nothing. including dividend, and it's only 0.3%. So the index itself will be negative. And since then, the market adjusted some, the current situation is better, but the future return will still be low. That's what we learned from the Shiller PE revert to the mean. And yeah, that's the Shiller P. And we extended this concept to sectors. That's done by us, by GuruFocus. And if you look at this picture, this image here, this table, these are different sectors, number of stocks within the SP 500 company for this sector. The Shiller P tells us the financial service is the cheapest with a Shiller P of 17.2, although the market overall is 32.4. But financial service is cheaper, consumer defensive is cheaper, industrials are cheaper, utilities are cheaper. These are the Shiller P, what Shiller P tells us. Consumer cyclical is more expensive, real estate expensive, technology, although it has a correction, but still expensive. And the regular P give us a different picture. The regular P says the energy is the cheapest at this point. But I think regular P is giving a false picture here because oil price went so much, and the oil companies are having good earnings, which brought the Shiller P of energy sector down. Although energy stocks have been go up quite a lot. But regular P will tell you it's cheaper. But actually, 2 years ago, if you look at this curve, this table here, it will tell you energy was cheap. That's what I could recall. If we look at the energy sector historical PE ratio, regular PE and Shiller PE, because regular energy sector was the earning was so volatile, so the earnings, the P ratio was not regular at all. For this kind of company, you want to look at the Shiller P instead, instead of regular P. You can see that during 2 years ago, in year 2020, the whole year, Shiller P tells you that energy was extremely cheap. Energy company stocks were extremely cheap, and it has been a good call. Since then, the energy sector has went up a lot. So overall, Shiller P is a better ratio, and not only for sectors and the whole market, we also calculate the Shiller P for each individual companies. If now I just come to a random company, Visa here, the Shiller PE is under the valuation here, under the valuation rank box. It's here. Shiller P ratio for Visa, it's close to 50, still extremely high. And if you cannot find, you can always search in the page. You can always search in the page by press Control F, search Shiller P. If we look at Apple, for example, Shiller P ratio is 50, still very high. And if we look at a cyclical company, Shiller P is 7. KB Home, okay, seems to be very low. And you can also filter with the Shiller P. If we come to all-in-one screener, Shiller P must be under the valuation ratio here. This here is Shiller P. You can filter with Shiller P. For instance, here I will filter Shiller stock with Shiller P between 8 and 10. And it will give us a list with Shiller P between 8 and 10. And yeah, that's the Shiller P ratio. I think also when you cannot find, you can always search. For instance, you can, if we want to search dividend yield, for example, you just search it. It will come to here and highlight the field for you. That's a new feature we actually released. I think it can be very convenient to make your searching of the filters better. Okay, again, You can filter Shiller Pe with all-in-one screener combined with all other filters. As always, you're welcome to contact us through the chat support here, or create a support ticket. You can also schedule a one-on-one meeting with us. James has been doing a very good job doing this one-on-one meeting. You can call us, of course. You can come to visit us in Plano, Texas office. I will be very glad to talk to you personally. Again, thank you for watching. This video is about Shiller Pe and the sector Shiller Pe and the Shiller Pe of individual stocks. And you can filter it. You can look at what the value is. It gives you a better picture, especially for cyclical companies, cyclical industries, and the market overall as well. Thank you for watching again. This is Charlie Tian. See you.